Yeah.
So we're gonna get started. We do have some friends on Zoom, so we want to be mindful of their time. Hi, everyone. Thank you so much for joining us, despite the less than optimal weather. I appreciate you coming out. I'm Deandra Chin. I'm a counsel here at Lowenstein Sandler. I can turn it over to Partner Rossi to give a brief introduction and kick things off.
Hopefully I got this right. I don't know if I did. It's supposed to turn green, didn't turn green. Let's see.
Yep.
Now it's green. Okay. So a couple things that are going on here. Number one is I got told that the first thing I'm gonna say is thank you for coming, because it's absolutely miserable outside. And for those of you who don't know, I'm a kid from Arizona, born on the Arizona Mexico border, a town called Yuma. If you're a big fan of Westerns, you know where Yuma is. And we don't do rain. I mean, we don't. I mean, when I grew up in school, if it was raining, they like stopped school sometimes, you know. We had rainy day schedule. We had to stay inside like we're gonna melt as kids. I don't melt, but like, you know, I still do rain. And so I thank you guys for coming, because clearly you have the capacity to do rain. And so that's my first thing. The second thing is I'm supposed to make some very important announcements, and I'm going to try to get to them and not be too loquacious, because the other people on this panel have a lot to say and talk about. And now I'm going to say, before I get to that, I'm going to say one thing I really wish I could do, and there's no official way of doing it. I wish I could actually go around the room and have everyone introduce themselves, because one of the big things about doing these things is that, in my experience, there's a lot of people that are doing things related to the continent of Africa. And we usually meet on the plane going back and forth. And you're like, oh, where are you from? You're like, oh, I'm from New York. I live in Brooklyn. You're like, oh, I live in Washington Heights. But you never meet each other unless you're on the plane going back and forth. And so one of the things I hope that we can do more of is bring us together, because I think there's some synergies there that can happen from our variety of backgrounds, what we're trying to do, and just that exchange of informational exchange. And so what I'll say, my charge is, you all need to know each other. Just as much as I want to know you, you all need to know each other. And so please, please take the opportunity in this venue to do that. For those of you who are online and cannot be here, I think there's a chat, and hopefully you guys will take an opportunity to introduce yourself on the chat. And on that chat, please include your LinkedIn. We'll try to do some things to help engage that group a little bit more as well. But introduce yourself to each other virtually. That's what you can do during this time. We ask for those of you who are here not to get on the chat. And then, because I understand that technologically it creates a lot of feedback, and that would be really painful and disruptive and really just annoying for all of us. I want to also thank some of my colleagues who actually are the real reason why this is happening. And if I miss anyone, it's because they didn't put your name on the sheet. It's not my fault. And also, I apologize for my other challenge and mispronunciations, but Henry Chu, Lauren Russell, Wally Fatai, Ingrid Carr-Gross, I gotta get that name right. That's my assistant. Jenny Amador and Jeannie Wagner, Engel Brondum, and Karen Martins, Owen Lewis, Ariel Prickle, Britt Harlow, and Carrie Fisk. And my last one would be for the persons that I missed. Thank you as well, because there's probably someone that I didn't get. Also, housekeeping. If you are on the chat, you can drop questions in the chat, and we'll try to get to those as well. Somehow, through the magic of technology, people are going to get those questions to us, and we're going to try to do that. And those of you in the room,
they can still join the chat. You can still join the chat if you use your QR codes, but just don't join the audio for purposes of feedback. So if you have a question and you want to include it on the Zoom chat, you can use the QR codes on your programs to do so.
And that's one of the many reasons why she's here. And two other things. Actually, only one other thing. I believe the panelist bios, you have a link to them. And so we're not gonna, although we'll tell you a little bit about ourselves, we're not gonna go deeply into giving a bio exchange. And then I think at this point, I get to stop talking until I get a question. Thank you all for coming.
Thanks, Rossi. And thank you so much to our esteemed panelists for making it out. We have Chi Achebe, founder and managing partner of Achebe Capital. We have Moji Fashola, managing director and general counsel of Karamo Capital Management. And we have Jemima Arivogene, director at Morgan Stanley. And of course, Rossi, partner here at Lowenstein Sandler. So grateful if you could each introduce yourselves, tell us a bit about what you do, and speak a bit about your journey, angel investing. Whoever wants to start, feel free. And if nobody, then I can fit.
I'm happy to start.
Yeah,
Maybe you
please
can just go down the line. Yeah, sure. Hello, everyone. My name is Chi Achebe, and I'm the founder and managing partner of Achebe Capital. Achebe Capital is a seed stage VC fund that invests across Africa and the African diaspora in the US. We invest across 4 themes, and we say themes because it's all very intersectional. It's not quite like a vertical, right? So the 4 themes we invest across are care, short for healthcare, climate action, commerce, and culture. The sub-themes within commerce are fintech, supply chain logistics, and manufacturing. And the sub-themes within culture are media, music, fashion, beauty, sports, wellness, like a lot of the themes that as VCs we tend to shy away from because it's hard to quantify, or it's not as straightforward as B2B SaaS. Right? But I believe that culture is alpha. Culture creates alpha. Across any vertical or industry, a company doesn't grow or become a household name until it really is relevant in the cultural zeitgeist. So a bit about me, my professional and personal background. I was born in Nigeria. My family immigrated to the US when I was very young. I grew up in Jersey. I went to a public high school in Jersey. So in many ways, I feel like my entire life has been navigating multiple worlds, right? I come from a family that's very rooted in our culture, right? And a family that's very respected and well-known. And then in the US, I grew up first generation, went to a public high school in Jersey, worked my butt off in high school, figured out how to get to a really great college. I went to Penn, and I've just been a big dreamer and a hard worker. And so professionally, after graduating from college, I started my career at Google, where I worked in B2B enterprise sales management. And then I moved to South Africa, where I was based for 5 years. I was only initially planning on being there for a year, and I ended up falling in love with being on the continent and stayed for 5 years. And so while I was there, I worked directly with Fred Swaniker at ALA and MasterCard Foundation, and I helped them build out what became the Nzisha Prize, which at the time was the largest accelerator program for African entrepreneurs. And so I traveled across the continent and scaled out the program and figured out, how do we identify the most promising young entrepreneurs across the continent? And in many ways, it was like building a VC fund, but in a nonprofit environment. And so we scaled it out into a $10 million renewable fund. And then I went on to start a healthcare startup in South Africa, and went through the process myself of trying to raise capital, right? And in that process, I was invited by Tim Draper to come to Silicon Valley. At first I said no, because he was, I was like, I can't, what is this Draper University thing? And why are you charging $10,000 as a billionaire? But graciously, he actually gave me a full ride. And I went to Silicon Valley and I met with investors in Sand Hill Road. And I fell in love with VC, and I realized, like, this is my calling. Like, they have the best job in the world, in my opinion. The ability to work with founders, help people really nurture their idea, and also share in the upside, right? And work with companies scalably, right? And so I then went back to business school to figure out how to get in, pivot into venture capital. And that's what I've been doing ever since. And so really briefly, post business school, I worked at Citi. I rotated through Citi Ventures. I became the first FMA associate to actually source and lead a deal in a company called Flutterwave. This is a company I knew the founders for a long time. And wonderful. They were actually mentors for some of the entrepreneurs in our program at Nzisha Prize. And I led the deal, and we got it through the finish line. But for whatever reason, right before the pandemic, Citi decided to pull out. The head of Citi Ventures decided to pull out, and his rationale was that he didn't want to invest in two non-core geographies, right? Referring to Africa as non-core, right? And we were also investing in a Brazilian-based fintech, prop tech company called Loft. Ironically, I knew that founder as well. We were classmates at Penn. And so I started to connect the dots. I was like, I think I have really good networks. I have good deal flow. I can do this. I can lead a process, and I really enjoy this work, right? And so they pulled out of the deal. And this is what connects back to angel investing, right? So when they pulled out of the deal, the silver lining there was that I was able to, I had to be the bearer of bad news to the team. And I went back to the founder, GB, and said, the team decided to go in a different direction. But if there's an opportunity, I would love to invest. I really believe strongly in what you guys are doing. I ran the numbers. I saw the models. I saw that they were outperforming US payments players, right? And so I asked him, I was like, I'd love to invest if there's an opportunity. And thankfully, he created room for me. And he said, I'd love to have you as a strategic investor. And so that was my first angel check, right? I invested, I brought in my mom, I brought in my sister, and created an SPV, and the rest is history. So fast forward a year, they became a unicorn company. 3 years later, they're now valued at over $4 billion, and I continued angel investing. I've made close to a dozen angel investments to date. I've invested in 3 unicorn companies. All of my portfolio companies have had meaningful markups, and now I'm in the process of launching and raising my fund. Thank you.
Fantastic. Hi, everyone. Moji Fashola, Managing Director and General Counsel at Kuramo Capital. Kuramo is a US SEC-registered investment advisor with a focus on investing in sub-Saharan Africa. We manage about $500 million in assets. And since the inception of Kuramo Capital in 2010, we have accelerated private and institutional capital into the continent. Before 2010, when we showed up, there were only 2 indigenous private equity firms on the continent. With the support of Kuramo, we have funded 21 private equity firms, 15 of which were first-time fund managers that we anchored. That's an achievement that we're very, very proud of. A lot of our majority combined our fund managers, the 21 fund managers that we supported. They've gone on to raise over $3.5 billion investing on the continent from development finance institutions, foundations, and just international institutional investors. On the VC side, we backed the first Nigerian-based venture capital fund, Echo VC, in 2014. And we also backed the second venture capital fund, Consonance, in 2017. Those funds combined, they've invested in about 87 portfolio companies, majority of which are doing well. One major or notable one is Afex, which is a commodity trading company that has just received about $30 million in funding from the British International Investments. We're very proud of the impacts that our capital has generated on the continent. On the job side, through our investments, we've been able to create and sustain over 350,000 jobs, impacting over 200 lives. One particular investment that we're very proud of is PHC, is a plantation company in DRC. We're the largest private investor in that investment, alongside the government of of the DRC. That investment, that plantation employs over 6,500 people. We have through the company CSR initiative, we have a hospital that is the largest private hospital bed in the country. And we're just proud of what we've done on the continent, consistent with our mandate of accelerating private capital and just bridging financial gaps. We recently launched a gender lens investing strategy. We have an acronym for it, ABC, Accelerate, Build, and Capitalize. Under the Accelerate strategy, we launched the Moremi Accelerator program, and I'm very, very proud that I have one of our distinguished alum here, Chi. The two actually, yes, and Funke Adepoju. Yeah, so we're very proud of that. What we're doing is that we recognize that even though we've capitalized the private equity ecosystem, it's largely male dominated. So we decided that we want to change the state of affairs by helping female fund managers to access capital. And so the intervention by Kuramo Capital is to provide structured trainings. Through structured trainings, technical assistance. We set up a company recently called SALT Advisory together. My partner and I were leading that initiative, and the aim of that is to provide technical assistance, technical support to help female fund managers to get to first close. On the build side, I said ABC. On the build side, we're recently selected as a facility manager of the 2X Global Africa Ignite facility. That the intention of that, the objective of that is to provide concessional capital to fund managers who are aspiring fund managers who are trying to build a track record just to get to first close. We find that a lot of female fund managers, they have good deals, right? They're talking to investors, but because they don't have a track record of doing deals, investors just take a step back and they don't want to invest. So the intention of this facility is to provide working capital, allow them to do the deals, and then they can transfer or sell the investments, right, upon first close, thereby, and they keep all the gains, they keep it to themselves. The last one, the Capitalize, which is C, the intention of that is we're currently raising a fund, a Moremi fund, called Moremi Fund. It's a $150 million fund, and it's going to be focused strictly on female fund managers. We find that most times female fund managers are likely to invest in companies that are managed by women. And more often than not, we find that most those companies, they actually succeed, right? So that's our way of removing the access or the barriers to funding. We believe that because of what we've done on the fund side, we can replicate it on the female fund manager side as well. When I'm not working for Kuramo Capital, I'm doing angel investing. Of course, my title says it all, my background. I'm a lawyer, born and raised in Nigeria, proudly Nigerian. I moved to the US in 2016. I came to grad school. I did my master's in law at Harvard Law School, and subsequently I moved to New York and I met the founding partners of Kuramo Capital, and they decided that I had complementary skills. And I've been with Kuramo Capital for 6 years now. I enjoy what I'm doing. I like the fact that the work that I do the social impact is palpable. You can see it. You see a business idea, and from ideation stage up to the growth stage, right? The number of businesses, the number of businesses we've supported, the number of jobs we've created, it just makes the work that we do more compelling. And hopefully through our conversations today, a lot of you, we can win you over to the angel investing side. Talking about angel investing, I've done a few deals. I came late to, I don't want to say I'm late, maybe I'm late. I started angel investing 3 years ago. The very first investment I did was Get Equity. It's a marketplace. It's a trading platform, right? And I really like that. It's really dear to me. It's a trading platform where you can actually, companies can raise funds, primaries, and even secondaries, right? For as low as $100, right? You can actually participate and participate in deals, right? And the beauty of that is that founders, emerging businesses can raise private capital through that platform. So that's one amongst several other deals. I'm looking forward to the conversations, and thank you all for coming.
Hi everyone, my name is Jemima Oragalgane, and I have to commend you for actually saying my name properly. I was looking at like, Jemima Oragalgane. I'm really glad to be here today. I started off my career in private equity at Goldman. I did that for a couple of years until I realized that a lot of the big institutions just quite frankly didn't care about Africa. And so I spent my last couple of years there really banging my head on the wall, trying to bring African deals to the table. And I would say that probably the deal I'm proudest of, that was the last one that I did there, was when we invested in Corner Africa. Corner Africa is an emerging market fintech fund that focuses across LATAM, Asia, as well as Africa. And I think for me, that really sparked like this interest in how do we really get institutional capital back to the continents? Like, what do the Goldman Sachs's and Morgan Stanley's care about? Why is it that they're able to take bets upon like founder after founder here, but once you put an African founder in front of them, you know, there are all these checks and balances and currency risk, which is a real thing, by the way. But I would say like that's really been like my life mission. And then after a couple of years at Goldman, I made a transition over to Morgan Stanley. And within the Inclusive Ventures Lab, what we do is a 5-month accelerator program. We do $250,000 for 5% equity, and our portfolio has over 96 companies in it. So before anyone started thinking about investing in underrepresented founders in 2021, yes, I said it, we've been doing this since 2016. And I think that really does speak to like the ethos of the group and the sincerity that we have towards founders. And like everyone else on this panel, I've been angel investing on the continent now for the past 10 years. So by way of background, I was born in Nigeria, but I grew up between Nigeria, Ghana, and spent some time in South Africa as well. My family lives back on the continent. And my route to angel investing actually happened in the most hilarious way. I was probably like a junior or sophomore in college. One day I just had this realization that it seems like there's so much money flowing around in America. People can start businesses, they can fail businesses, they can start other businesses, you know, but once you make a mistake on the continent, it's like that's the beginning and end of your capital line. Unless, of course, you know, you're one of the rich Ajibota people, as we like to say, right? And so where my journey really started was I was working a $20 an hour job on campus in the vast library at Yale University. So I would work my job, get my paycheck, take a little out, you know, to make sure that I could do enjoyment small, take a little out to make sure that my family was good. And I would put the rest in an investment account that I would grow to $1,000. And then I would go find an African company to invest in. That's literally how I started, $1,000. And I think like for me, it's always just been able to like go back home, have boots on the ground, find phenomenal founders who are building amazing businesses at ridiculous discounts, because that's what our continent has, talent like no other. And I'm severely passionate about it. My mission in life is to make sure that folks in the diaspora send their money back home, because we are the ones who's going to build the continents. I'm sorry, but it's not our governments. It's not the World Bank. It's not the IMF. Shout out to them, though. But you know, it's literally us. It's our cash and it's our capital working back at home that's going to do the business.
I feel like I want us to get more into the conversation. But I should put out my cred. I've actually, there's a reason I have gray hair is I started on the continent in '93. And I started off, I was working for a gentleman by the name of Reverend Leon Sullivan. And he had this idea that he was going to build a bridge for the diaspora between all the children of the diaspora that were spread around the world back to Africa. And I was his first intern. And he was working with a lot of large corporates. He had a guy by the name of Ira Hall, who at the time was treasurer of IBM, which was he was the highest ranking person of African descent in a corporate 500 company at the time. And he was heading up a whole effort among large corporates around the world to get this talent, get these corporations to invest back into Africa. And for those who know Reverend Leon Sullivan, if you don't, you should look him up. He was a board member for General Motors, Mellon Bank, and for Texaco, and pastor of a church down in Philadelphia. And he also founded OIC Opportunities International. So I was young man, that's what he called me. I didn't realize he knew my name until years later. A number of entrepreneurs started coming to his organization asking for assistance and help. And he said, young man, you handle that. This is before we use terms like SMEs, before we use terms like angel investors, before we use a lot of terms. We just tried to do something. Most African countries had no idea how to deal with small entrepreneurs. Their whole process for starting companies was so like mind-numbingly painful. In some places, that's still the case. And so, but he had contacts. He had contact with ministers. And so we could actually advise him to do things differently. I did the first 3 of these. Suddenly I was the expert because I'd done 3, no one else had. And I just started working with SMEs around the continent, trying to help them start up in different countries. And if I liked it enough, I put in some of my own little bitty money because they would take money from me. And I did. It wasn't called angel investing then. But it was important to me. And I hoped that one of them would do really well. And some of them did okay, and some of them didn't. But that was beside the point if I look back on it now. But one thing that became very clear to me, for those of you who know, I was I, like some other people here, was a firm called Skadden Arps for a number of years, a couple decades. And there was a different type of Africa deal Skadden did. But one thing that I saw, fast forwarding, was that there was a lot more activity down here at this other level. That's where the action was, in my opinion. That's where the energy was. That's where the new ideas were. And I just thought if we could actually bring some of this information that's ways of doing things and get it information transfer down to this space where the real energy is and the thoughts are and the new ideas are, boy, could we really do more? Could we really do something special? And that I've been trying to do in a variety of different ways. This is the newest iteration. And in this iteration, one of the things I was talking to one of my partners earlier today, I was talking about, well, one of the big challenges has been around the continent for years, has been these funding cliffs. I can go to these various, whatever sector. I could talk about what happened to PE years ago. I can look at VC now. There's these places you can get money here, but you can't get money here. You can get money here, but you can't get money here. So your friends may give you a little bit of money, but there's no angel investing to you. And one of the things that's really missing is that organized angel investing community in the diaspora, or people who are interested in investing in the diaspora in an organized way. And there's been some attempts, and some people who are on the panel are tracking it better than I do. But our earlier conversation, we're like, you know what? We need to bring that knowledge together so people at least know who's doing it. And we're going to try to work on that. Anyone wants to join us on that, just so we can find each other, right? But that's just a missing gap, in my opinion, in the capital stack. And so if I start up a business, right, and I'm on the continent, and it doesn't take a lot of money to get it going, but I still may be scrambling to get that. To get that first dollar outside funds, there's no place to go. And so really it becomes, it's not the quality of your idea. And always it's a little bit of who you know, but there's not even a place to approach the who you know, because there's not that group of people that anyone can find, right? And so one of the things is we need more of that group of people. And hopefully some of you are, and some of you will be like, this is so bad. It's not a big check, given the exchange rate between the dollar and most African currencies. It's not a big check, but it's a very impactful check. As we heard, it can get you in on the ground floor of some real interesting opportunities. So I was there in 2010 when the Cramo started, Wale. And so I hear these stories, and I'm like, it's great to see what some people have been able to do, grinding it out over, I guess it's now going almost 15 years for it. And he left a very safe job to do that. But one thing you can do with the angel investing, you don't have to leave your safe job. You can still do it. Something, especially in this world now with technology, you can do it on the side. It really can be your side hustle. It is best, in my opinion, that you actually make some trips. There's nothing like boots on the ground. There's nothing like that knowledge. That's actually a barrier to entry for some. But if you can actually develop those relationships on the ground, it becomes highly advantageous for you because you just know some things that others won't and they can't figure out from a distance. And so that would be the first thing is, do more than just take a vacation. Take a vacation with purpose. And there's some great places to vacation too. And once again, the dollar travels a lot farther. But when you're there, make sure you get off of the resort, make sure you leave, the Kaminsky, and you go actually out and about, and actually get an opportunity to engage that entrepreneurial community. I'll stop there. You got some questions for us, don't you?
I do. So understanding that our audience is quite diverse, we have some people who may be considering becoming angel investors, some founders who might be looking for angel investments, others who might just be interested in venture trends on the continent. I think it would be helpful to just level set and answer the question, what is angel investing, and what are meaningful differences between angel investments and other venture investments?
Oh, should I go? I mean, at a very basic level, angel investing is essentially individual investors, right? Maybe accredited, maybe non-accredited, investing their own money into very early stage companies, ideally in exchange for not only capital, but also mentorship and access, right, to their networks. And then VC investing is institutional capital that's being invested. So actual funds investing other people's money in earlier, whatever, or sometimes growth stage companies. Again, ideally for capital and mentorship or guidance. That's not always the case, but that's the ideal. That would be my definition.
I think the only thing I would add is sometimes the way I think about it is VC investing allows you to do what you're doing with angel investing, but on steroids. So because there's more access to money, more LPs, you can pull money together for more people. So basically angel investing, but times a million.
And the one thing I'll add, first of all, as a lawyer in the room, if you're a founder, I will make the statement that you should have accredited investors. I've said it. Okay, we're good. The next thing I'll say is that while I agree that the VC investing is basically the angels on steroids, the challenge oftentimes, you think about it, they're typically writing larger checks. And so there's often, not always, but there may be a window in the company's life cycle where it's in its attempt to get to where it's going to be attractive to a VC. They still need some capital to get their idea to a more mature stage. Not fully mature, but to a more mature stage, so it'll be attractive to the VCs. And that's your sweet spot as an angel. Now, ideally, as an angel, what you want to do is come in and be that catalytic capital right before they're attractive. There's clearly something they need that money will buy. If you put your money in, they can do this, and you understand the VC's position, so you understand why that's going to make them attractive, and the VC money should come quickly. It's a lot more risky as an angel investor if you're investing in the idea. They got to still pull it together and stuff like that to get to the stage where it's attractive to the VC, and you just like the idea. Then you're really betting on the person, their ability to execute and find their way. And some people, that's a good bet. But the sweet spot I would say for an angel is, if I were a VC, I would totally invest in this company if they did this. And then you have a way of giving them money to get them to do this. And that's the angel sweet spot. As a founder, your sweet spot is whenever you can get money. So,
and what are some common misconceptions about angel investing that you would like to dispel?
That they're angels. They're investors.
Yeah. So let me start off. I'm going to wear different hats answering this question. The first one is that on the founder side, we find a lot of founders, they believe that they would rather go after VCs than expend their energy on angel investors, right? And that may be true, right? But then if you look at the way venture capital funding, right, as kind of gone in the continent, you would see that there's been a steady decline, right, at least for 2023, 2022, 2023, for several reasons. Global market trends, right? And we've seen that foreign investments on the continent is cyclical in nature and consistent with global market trend. So if you're a founder that you're focused on, say, a tech-enabled startup, you're focused on Silicon Valley, what it means is that when the market is moving away from venture capital, it's going to impact you. If you also take into account the fact that as a minority founder fundraising, the investor class is also underrepresented, right, as far as minority groups are concerned. And this is not particular to Blacks, whether you're Hispanics, whether you're a woman, right? That group is underrepresented. And so what it means is that the capital that is also flowing to founders that look like them is also limited. And so what that means is that you cannot rely on VC funding alone because you believe that angel investing or angel investors are time wasters, their ticket size is smaller, you would rather go after big money. Big money is good. It provides reassurance to your brand or your business model, but you want to diversify your investor base, right? We've seen just in 2023, over $200 million was eroded in operational investments just because startups couldn't raise follow-on investments. They had corporate governance challenges, or they just had market penetration challenges, right? And so that's where you need angel investors who can open the doors for you, right? When it comes to penetrating markets, when you're having challenges navigating regulatory issues, for instance, they can make a few phone calls. But beyond that, they are also able to provide alternative sources of capital. And if you go through angel investing network, you'll be surprised that you will get a very good check size. So that's one as far as misconception on the founder side is concerned. On the investor side, a lot of people believe that I need to be an HNI, right, in order to be an angel investor. But you don't need, you can as low as $1,000, right? I talked about, or even less, right? We're talking about the continent, right? Their foreign exchange issues. So your $1,000 or your $500, when you convert it, it can make significant difference, right? When you convert it to local currency. You don't necessarily need a big check to make a difference. Because the beauty about angel investing is that in addition to the capital that you're providing, right, you also provide non-financial support, such as mentoring, access to your social network. Angel investors would volunteer their time to review pitch decks, and all of that, it comes in handy when you're eventually talking to institutional investors. So that's, I mean, the misconceptions, there are a couple of them. We could go on and on, but in the interest of time, I'll just leave it to those two main ones on the founder side and on the investor side.
You know,
Well, is there anything you wanted to add? There's one thing I wanted to underscore in terms of what you said. But So like, I wanted to underscore what you said around the misconception around angel investors, because they're writing a smaller, relatively smaller check, there is an additional value add. That's definitely not, well, I mean, if that's the case, you're not doing it right as a founder. Your angel investors should actually add tremendous value, right? And you should select them based on the area of expertise and how much value and guidance they can give you at the earliest stages. One other thing to note is that whereas VCs, they have to answer to other people. They have LPs, right, that they have to answer to. They have to return the fund sooner rather than later. And so sometimes they can actually be, the alignment in terms of incentives may not be in your favor, right? Whereas angel investors, they answer to themselves and to no one, right? Well, to themselves.
But those are city venture situations.
Exactly.
Right? They
Yeah.
pulled out because they were answering to someone else. It
Yeah.
wasn't that the investment didn't make sense.
Exactly.
You know, and that's it.
Exactly. And so, and oftentimes the right angel investors are doing it for more than capital, right? It's a labor of love. They're doing it because they love it. They want to see you succeed. And so if there are any like founders watching, I'd definitely say, use that as a criteria, as a litmus for deciding who to bring on board as an angel investor, because ultimately equity is the most expensive form of capital you can get, right? And so it's in your interest to make sure that they're adding value and put them to work as well.
Yeah, the other thing I'm going to say is flipping to as an investor, if you're not willing to roll up your sleeve somewhat, you shouldn't be in angel investing in that company. I don't think angel investing, and this is my own bias and experience, works from a spray and pray model. Yeah, you might be able to do that with other people's money and get enough flow coming your way that you're going to have enough successes in there to do okay, especially in a rising market. I think we're going to see that shake out for a number of VCs over the next couple of years. But that was a way, maybe for a number of years that you could still keep doing it, raise your next fund. As an angel investor, you should only invest in companies that you're prepared to roll up your sleeve in. And you shouldn't invest in so many, especially if it's your side hustle, the way you don't have time to get involved with them. It's one of the ways to protect your investment or to enhance your investment. Like you put some money and some sweat equity. I'm going to be a lot closer to what's going on with the investment. They're going to take my advice and listen to me. I get a chance to influence it, but I don't have all the responsibility on the day-to-day, right? And that's one of the nice things about it. It's your closest thing to for some of you in being, on a board of directors, right? You literally have that real intense when you need to focus of the C-suite on what you're saying, but it's also a way to protect your investment. When I'm investing in the market, I'm looking at, but I can't influence what Apple's going to do. It's just let it ride, right? I can vote with my feet, but that's all I really I can trade in and out of the stock. In this, I can put some money in, small check size. If I believe in it and I can dig in a little bit, I get to move the needle. The last thing I'll say, flipping to the other side, if you're a founder and you think you have a great idea and you actually want to see the ECVC ecosystem improve across the continent and diaspora, then you owe it, if that's true, then you owe it to that community to at least spend some time in your fundraising cycle trying to bring in some angels. Because successful angel investors beget more angel investments. And so she had a successful investment. What did she do? She took some of that money, she put it back into some angels investments. That's what angels do. So if you have a company that you really believe in, pull some other people along, because then they're going to turn around, lift while we climb. They're going to turn around and reinvest some of that money. And that's how you build a robust ecosystem. That's how Silicon Valley, frankly, got started. Some people made some money. You look at that whole, PayPal mafia, right? They made some money. They kept reinvesting. They kept, and And that's what some of us in this room have to start doing, is thinking about not only what we're doing, but how we do it, because it's going to affect the ecosystem overall.
Yep, yep. And if I can just add to that very quickly, Rosie, it's very important to find capital allocators, indigenous capital allocators, or allocators who have a deeper connection to the continent, because they have long-term commitments, right? They have their connections are long. Their connection is a long-term commitment, right? They're not just opportunistic in their strategy. And so when there are macroeconomic challenges, they're not going to run away, right? So that's one advantage of angel investing. And when Rossi said that most times when people exit, right, they reinvest, that's very true. I did an investment recently, less than 1 year, got exited. I didn't take the money, right? 1.4x, I reinvested it back into another company. So that's typical, right? And that's why we need to continue to, there's no better time to have this conversation. And we should thank Lowenstein for leading the conversation at this time. Yeah.
I think the only last thing
Last thing, yeah.
I think on the founder side, a huge misconception is you need to be running away from your angel investors. You should probably run away from your VCs, but like if stuff is going, like if things are really starting to hit the fan and you need people who can really roll up their sleeves and like be in the work with you, it's really your angels. Because as Chi said, you want to make sure that you're picking folks who come with more than just a check. People who can call, this accelerator that you're trying to get in and be like, hey, my company is applying, please take like a deeper look at them. But yeah, I think that I do see a lot of founders trying to like run away from the angels, especially when things are starting to go downhill. I'm like, no, those are the first people who should pick up the phone and actually call it.
You can also run towards the Shepherd Capital.
Yes.
We've heard a little bit about each of your journeys in angel investing, but for someone who's looking to start angel investing right now, how should they start? What's the first step? Jemima?
So I gave my story, right? I was in college and I was like, oh, here's $1,000. I'm going to find a company. That investment tanked. Like I think I went into crypto way before it's time. So whenever I see the price of like Bitcoin these days, I get salty. And I'm like, wow, that could have been me. I think the first thing, honestly, is educating yourself on what the landscape looks like, especially if it's not an ecosystem that you're conscious of, you're educated about. There's nothing wrong with rolling up your sleeves and like trying to like find ways to educate yourself. And I'll say that in terms of resources, something that I've seen to be really good, especially in America, there's like Dream VC, like they have like a hands-on like course program where they basically train you to be an investor, where you keep your day job. Out of East Africa, Parati VC, where the Parati VC runs a fellowship. Love Jakob and the boys there, and you're really working with founders on a day-to-day basis. You're editing pitch decks, you're editing models, you're thinking about how they should allocate capital. But I'll say almost find a way to practice being an angel investor without actually committing your capital, especially if you're just like, this is not a world I'm familiar with, but it's something I want to get into. I think the educational piece is very important to also ensure that you have longevity. Because believe me, when I lost that first $1,000, I was like, wow. I could have gone to Miami, and that could have dissuaded me. But because for me, like that's home, it was like, of course, you bounce back. But I would say the educational piece is definitely very important.
Mm-hmm. I completely agree. And I'd actually even say, in terms of if you're wondering like where to start, I would say start within, right? So really understand what your view of the world is. What do you believe in? What world do you want to see? Right? What would you give money away to philanthropically to see it improve? Right? That's probably some form of your thesis, right? And then from there, once you've developed your personal thesis and your personal goals, look around you, right? And I think oftentimes the best investments are in people that we actually already know in our networks or first or second degree separation. There are so many missed opportunities. Oh my gosh, in my network that, like Wemimo and Isusu, there's so many, right? I was fortunate to invest in Flutterwave, but there were just countless others. So just work with the folks around you. And then also too, that's actually a great way to like practice without investing your money, because if you're truly value add, then folks will ask you to be an advisor. You get advisory shares and you get some form of equity without having to kind of put down capital. And additional resources that I want to just kind of build to the great list that you started, Jemima, was also there's Hope Capital. I think they're New BK, and they're based out of the Netherlands. I just want to give Future Africa a shout out. It's no longer exists. Shout out to E, because they really laid a great foundation for this type of work. And now it's actually evolved into a fund, which is great to see. And then also in the US Cap Table Coalition. I've done a few deals with Cap Table Coalition. They're a great group. And there are also different like affinity groups as well. And also, God willing, one day, in Achebe Capital, we want to have an arm where angels can invest as a collective called Vested Interest. And so hopefully, one day we can add Achebe Capital Vested Interest to that list as well.
One other way you could also get your feet wet, but not drown. There are some fairly solid incubators on the continent. And you could reach out to them, and if you have a skill set that they find interesting, which most of you probably do, you can link up with them and offer your skill set to help them out on various things. That also gives you the value add of when you go and take your vacation, you take your vacation when the incubator is located, and then you go spend some time with the incubator and some of their founders and their companies, and you get your feet a little bit more wet. And so you're basically using them as your backbone to introduce you to some of the founders, but you're starting to figure out a rhythm. That should create a broader network for you and also give you a little more confidence in vetting some things as on your own. But that would be one way to do it. Sometimes it's better to walk with, or think about when you first start roller skating, for those of you who did, and somebody's on both your arms holding, and I'm just thinking of that because I'm trying to teach my daughters to roller skate, and you have to hold them, and they're like, so a little bit like that, because the incubators have some infrastructure, and they could definitely use, I think, some skill set assistance. John Paul, raise your hand if anyone wants to take up on that. Other incubators? No, okay. John Paul here, who I haven't seen in a while, running part of an incubator in Accra.
So switching gears.
And you have a New York wing too, right? Yeah.
Switching gears a bit, it's no secret that investors are interested in due diligence. What would you consider best practices in due diligence? What should angel investors looking to invest on the continent be looking for? And what should founders be sure to have or provide?
Okay. Let's start off by saying that when you're doing a deal as an angel, it's really pre-seed or seed stage. So it's really an idea, right? No operating track record, no proven business model at that time. So you want to look outside of the business. First, you look at the idea. Is this an exciting idea? Is this one that is likely to scale? Is there a product market fit, right? So if you're trying to do something on the continent, do you think this is likely going to fit in the markets, right? Are you solving a problem, right? So you want to answer that question. And then if you're comfortable, right, with the product or with the service offering, you want to look at the team, right? What's their track record? Do they have experience, the founders and team members? Do they have experience in what they are talking about? What have they done before now? Is this a solo founder, or are there two founders? Do they have complementary skills? One that founders need to consider: valuation. You say some very aggressive numbers, right? And investors retreat. So it's something that you want to you want to take a look at, are these numbers real? Are they justifiable? Right. And that underscores the need for you as an angel to do deals through angel investing groups who would have reviewed or helped you to answer some of these questions, and they are sort of comfortable that this is one that they believe would scale, would attract a VC. Another thing to consider is just barriers to market entry, right? Is this one that, are there regulations in the industry? If there isn't any regulation, is this one that will stand the test of time if a new regulation were to come into play? One thing that I also like to do is innovation, right? Are they kind of reshaping traditional industries, right? That's an indication that it's likely to scale as far as the business idea is concerned. We're seeing that just in terms of doing due diligence, you also want to, at that stage, you don't really know you also just want to sound out people, do you know these guys? Because you're not just backing business ideas, you're backing the people, right? And if you would observe that there's been a lot of corporate governance failures in the startup industry. So you just want to call a few people, right? And personally, I don't do deals in a personal capacity, right? I do it through groups. It's either a friend of mine that I know who is very active in the space, has vetted this person or these people, and it makes it reassuring, right, that you're backing the right people. If there are a few other professionals who are solid, who have good expertise, if they're given a vote of no confidence on someone, then you can be sure that these guys, you're backing guys who would not run away with your money. So those are some of the things that at that stage, at the angel investing stage, you are just kind of looking at.
Yeah.
I was saying sir, investing, like some people will say you invest in people, some people say you invest in ideas. There's a lot of writing about why you do one or the other. And the quick summary is, if you're investing in an angel, you better watch out for both, right? You can't just, so that's my first point. It's both and. The second thing that I want to add though is, and this is sort of my view on Africa, so if you guys feel differently about it, there's this issue of total addressable market, right? And in my opinion, there is no country, some people would argue that Nigeria beats this, but in my opinion, there's no country that has a total addressable market that's large enough to scale the way you want a VC company to scale. And so one of the things you need to be looking at is, do I think this idea can leap across borders? And do I think that these people have the cultural competence to be able to cross borders? Because eventually to get to the scale I want, that company's gonna need to be able to do that. Some sooner rather than others, depending on where they're coming from out of the continent. But ultimately, I think they all will. My special case in Nigeria is while they have the population, if I look at the income distribution, et cetera, it's like China was. There's not really that big of a total addressable market yet, even though they have the numbers. And so that's another issue. And we're seeing enough VCs get to size to where they're now starting to have this challenge, right? And that's becoming an issue for some companies. I would bet early on founders that actually have the cultural competency, that they could actually, I joke with my Nigerian friends about them in South Africa, but I always like to hear that Nigerian was actually able to live in South Africa because of, other than on the football pitch, they can get along. But it's this ability to actually manage across borders that tells me that founder may be able to actually scale across borders.
I'd say the only thing that I wanted to add to that, to a point that you made earlier, actually, I can't overemphasize the fact that you cannot do due diligence on an African company the way you do on an American company.
Boom.
And I think it's a conversation that I don't know if we're ready to start having, quite frankly.
Let's go there.
Multiple reasons, right? Whenever
Close the doors. No.
whenever a founder, like for example, comes through our lab, okay, you know, you probably went to Harvard or Stanford, you know, or one of the 4 schools that produces so many entrepreneurs. You know, okay, we know where you went to school. There's just a track record that makes sense, and a track record that's very visible. And I think you made a point earlier about having boots on the ground, and I found that to be one of the biggest sniff tests that you can have. If something feels off, it probably is, you know. And I think that when it comes to doing due diligence on the continent, there's a level of partnership that's needed, whether with local investors, local VC funds, local angel investors, to be able to actually vet founders. Because I mean, $6.6 billion coming into the continent, like in 2022 alone, a lot of people realize that, yo, this VC thing is bringing in money. So what you're saying is, if I start a company and it fails, but you invested in me, I can be like, company failed, whoops, whoops, and everybody goes home, and you know, and nothing else happens. And I think the number of fraudulent corporate governance issues that we've seen break out across startups has been very concerning. So as much as I'm always encouraging people to invest in the continent, I'm like, please do it with 2 eyes open, 2 feet on the ground, and 3 ears on the ground. Right? Because at the end of the day, like you cannot do due diligence on the continent the way you do in America. The line of communications are not clear. You know, the track record might not be clear. Like, go there. Like I always say, if you can, meet the founders. Meet somebody who went to school with the founders. You know, at least like know that they're building what they said they're building. They're who they say they are. And that's just to like be very honest, because it makes me really sad, because I feel like some of these fraudulent founders don't realize that you're actually setting us back. Yeah. Because what happens if an A16Z invests in you and then, you know, it goes boom? That's it for Africa for the next 10 years, you know, until a new person comes, like, believes on the continent. So we cannot afford to get this wrong. So yeah, I would just say due diligence, find local partners, find people who can actually, like, you know, understand the nooks and crooks of the business. If something feels wrong, it probably is. You know, and like really like go with that instinct. That's what I just wanted to add.
100%. I'm just going to quickly just add, just to layer on what we've discussed. So I would completely agree in that. In fact, the way that we do due diligence in the US, you probably shouldn't be doing it that way, right? Because if you think about what you're really vetting for at the earliest stage, it's the team, it's the founder, it's their character. Yeah. It's the founder's character. It's their resilience. Right? Like, how do you vet for resilience?
Character with school, and that's not the same thing.
And it's not the same. It's actually, yeah, definitely not correlated. Not always correlated. Sometimes, you know, it's asymmetrical.
Well, for those of you who went to those schools, you know, the character in school doesn't always line up.
Yeah, and you're really vetting for resilience. That's key, right? So what I want to add to the conversation is, okay, we know what we need to vet for, but how do we vet for this? What sort of questions should we be asking, right? Especially if it's a founder you don't know, right? Ideally, you should know someone, either if you don't know the founder, you know someone that knows the founder, and you can kind of just get some other like feedback from other sources. But if not, you should really be asking, really excavating their background. Like, what's a time that they really have, like, they failed and they pushed, you know, overcame that failure or that hurdle, or whatever the case may be. And I think that's actually what gives a lot of African founders that competitive advantage. It's hard to build anywhere, but especially in a lot of African countries, right? Because in some cases, a lot of times, the infrastructure, there's just so many variables that make it especially difficult, right? It's hard to even sometimes do well in school. So like a lot of those things like are what you're vetting for. You find that a lot of African founders have it in spades. They didn't go to the brand name school, but they have the skills, right? They have the know-how. So I would say ask those sorts of questions and do that sort of excavation. So
taking a deeper dive, operationalize this a little bit. As a group, there's maybe exception to this, but as a group, people of African descent are fairly social, which means this. We talk about degrees of separation. 6 degrees of separation doesn't apply to us. So if I'm going to invest in Africa, and anybody in Africa, I'm going to assume that I'm going to know someone who knows them. because everyone who's actually doing something, I don't care where the bottom was they started from and now they're here. Somewhere along the way, they met some people and they know some people, right? And so I should be able to figure out once I plug into certain networks, someone should know them because this shouldn't be the first time they've actually done something. If this is the first time they've done something, they shouldn't be starting a company their first time out. They should actually be working with someone else to do something. They need to do a little bit of finishing school. So I may be like, nice to know you, but you're not ready yet. Someone who actually is ready, somebody knows them. They've done some things. They may have failed, but someone can speak on their character. They may have, this may be their fifth try. Oh yeah, they always got great ideas and this happened to that. Someone's gonna be able to tell me. Once I find out enough, ask you enough questions and find out who you are, there should be someone I should be able to ask who's on the ground that's going to be able to figure out who you are and give me some feedback. And if I can't get that feedback, then we have to just keep talking a lot longer because I don't know you and I can't know you. And I should be able to know you through some other people if you actually are ready or actually are doing something. That's my view.
We spoke a bit about the social impact that angel investing can have. And there's often some tension associated with social impact versus return on capital. But there's also the notion of, doing well financially while doing good socially. How has that impacted any of your investment theses when you're angel investing, if it has at all?
Yeah, I mean, so let's put the theory first, and then we can get to particular opinions. But there's some people in the impact investing community that thinks that you should get the same alpha, but you also get to do good. And there's some people in the impact investing community who believe they'll give up some alpha in order to do good. In my opinion, so let's get to opinions. So in my opinion, now that I've laid out what the actual debate is, in my opinion, Africa is one of those rare places where you should be able to do both all day, all the time. There's so much good that can be done. And the opportunity for a good idea to really be transformative and disruptive and grow. And frankly, I mean, for those of you who use online banking, there was this thing called M-Pesa years ago. Yeah, and if they had real capital, if the ECBC market had been different, they would be Apple Pay now, right? So there's these great ideas that are coming out of it. Some of them don't actually get to where they get to translate across like they could if they really had capital, but the ideas are great. And so, and what M-Pesa has done, Safaricom has done in Kenya has been transformative, even though they haven't been able to scale like, in my opinion, they could have. And so I just don't think that particular issue is, we talk about the UN SDGs, right? It's like, well, how can you miss them? If you're investing in Africa, it's like, I think I hit one. I mean, it's that like, and so that's my opinion about that particular discussion. You should, if you're not doing good and you're investing in Africa, and by the way, there's plenty of people doing that, and that's called colonialism, that's called a lot of other stuff. Then you actually, well, let me stop, but I have an opinion of that investment. But you should be able to do good to invest in Africa.
I completely agree. And I just want to highlight
You agree with me?
I hear you. I hear parts of what you said. I agree with parts of what you said. But I just want to highlight something you said, we were talking about Karamo and some of the investments they made. 6,000 women employed. That's already doing good,
Right.
And I think that, and even what you said about M-Pesa, right? M-Pesa, the Safaricom taxed away, then that became MTN Mobile Money, Airtel Mobile Money, Tigo Mobile Money. It's even though M-Pesa did not become the Apple Pay of the continent, what it did birth is multiple copycats across. And now the way we transfer money across the continent is different. It's seamless, it's easy. And so I do think that sometimes we have these interesting checkbox that we need to put around things for okay, what is I'm just gonna I'm gonna like highlight so for example, like what is like the number of like greenhouse gases that are like avoided, by this investment? It might be 0, and that's okay. But if we're employing, 6,000 women, that's also basically what I'm trying to say is I think it's important that we also have our scale of what is good for our continent and our local context. Because I think a lot of what philanthropy has missed on the continent is by trying to impose their version of what they think people need. And then in that way, misaligning dollars, right? So people might not necessarily need like mosquito nets, but what they do need is more schools, right? And what they do need is access to like education, quality education, textbooks. So yeah, my thing is, I hear you. I partly agree with you. I just think that we need a good framework of what good looks like within particular local communities, depending on what the most pressing needs are there.
You made me think of something else though, which is why the local network is important. Because sitting here in New York, something may make sense as to why it's good or not good. Something may not make sense as to how's that going to work. And having someone there to be able to talk to about the idea that may tell you, no, actually, the scooter works a lot better than the minivan in delivering packaged goods. And here's why. And you're like, oh, well, they can actually put enough stuff on it? No, they really can. Like, that's something that wouldn't match up in New York. First of all, the packaged good would be all over the street. Someone would knock it down. But it actually works in a number of cities on the continent. That's actually a much better way. And I just use that because we can visualize that. But it's this idea that how you see things may not apply on the ground.
Yep.
And you were talking about the doing good. I think the same thing, that on what's really good, we should have a real thoughtful view of that. It's not necessarily some formulaic piece, but I think you have to understand the particular locale to understand whether it's actually good.
I would say, for me, it's pretty, obvious. In the case for the continent, there's just so much opportunity to have an impact. And so in any given area, right, you do well by doing good, right? The market will tell you if you're adding value because customers will be paying money for your service, right? And so that alone just is it's an indication of the level of impact you're having, right? Or doing good, or how good you're doing. And if you're doing well, you're creating jobs, which is again another level of impact. I think the one thing that we do want to make sure we're intentional about when you're building your companies and growing your companies is like also making sure, but again, on the continent, I was going to say also making sure that like your team composition, like the jobs that you're creating, your internal team is inclusive and it's diverse across gender, across many different factors. And I would actually say that, there's so many amazing, African women leaders on the continent. Like that also something that culturally, actually, it's part of our culture in many ways, and it has been for a long time, right? Women do lead, and it's natural, and it's expected, and that's good, right? And so, yeah. So I would say it's almost like a conversation that's like, it's for me, it's very clear. Like Africa is the next frontier of impact, of wealth creation, and yeah, those that get it, get it.
Those that get it.
And those that don't, it's okay. Leave it for us, right? And so, but yeah, I think it's very clear to me, and it shows, and it shows in the returns. And one thing I did want to add really quickly is that there have been a lot of examples of companies that are like unicorn companies that have been created within a single country, right? If you look at MNT Hali in Egypt, right? The founder is incredible. Just spoke to him a couple weeks ago. Like they it's an Egyptian-based unicorn company, right? Flutter Wave in many ways, though they've scaled across the continent, most of their customer base is in Nigeria and West Africa. There are a lot of examples of that, and that's the kind of the beauty and the opportunity of the continent. It's like any given area, pick an industry, pick a market, pick a vertical, you can create multiple unicorns, multiple winners in that space, because there's so much green space, there's so much opportunity.
One of the things I'm going to say, and I don't think it may be controversial for some, depending on your investment horizon, you cannot do good without doing good, right? And so it's a very volatile market. And one of the ways to ensure your investment's long-term viability is to make sure it's contributing to stability of the area as opposed to destabilizing it. And so it used to be with a number of investments, because of the fact that things move slower, that you could actually get a lot of alpha for a longer period of time, even though you were destabilizing the Niger Delta. I think that is increasingly becoming less and less plausible, because information moves a lot faster. Everything is moving faster with technology. And so I think that if you're trying to de-risk your investment, you need to be also thinking about how it's contributing to where it has a broader set of stakeholders that actually want to see it succeed because of the positive impact it's having. That's actually a way to actually enhance the investment's long-term viability and sustainability, in my opinion.
I know we're coming up on time, so we'll do a final question and then take Q&A from the audience. So there are approximately 140 million African natives living abroad. Do you feel that they are uniquely positioned to fuel and push the venture capital ecosystem on the continent, and how do you think that they can do that?
So definitely, last year in 2023, over $100 billion went to the continent in diaspora remittances. And that's about 3.5% of the GDP of Africa. In fact, about 14 countries in Africa, diaspora remittances, foreign remittances, account for about 5% of their GDP. That's huge, right? And what that means is that when we're talking about angel investing and the need for you to tap into the resources of the diaspora network, right? The remittances makes it more compelling in terms of the private capital that is accessible to startups and emerging early stage businesses. And so what I believe we need to do is that more of these, you mentioned Cap Table Coalition, there are a couple of angel investing groups out there. We need to provide access to quality deal flow information to all of these angel investing groups, right? Whether it's Microtraction, Dream VC, and those of us who are here, we need to have a personal commitment to use, we've just talked about doing good, to contribute or give back to our community, knowing that your capital is not just providing financial returns, right? But there's significant impact that is coming as a result of that. Economic development through job creation. More importantly, you're seeing that innovative strategies, innovative products are being employed on the continent. Traditional industries are being disrupted. And there's a youthful demography, right, that supports all of this, right? So this is not the time for us to, we're doing very well as far as remittances is concerned, but the question is, where is that money going to? Is it going to early stage businesses, SMEs, MSMEs that have historically contributed the largest number of jobs, right? So how can we do that? It's by having these conversations. And the good thing about it is that governments across Africa, they're rising up to the challenge, right? We're seeing new regulations encouraging angel investing. 4 countries on the continent have enacted the Startup Act. Nigeria in 2022 or early 2023, I believe, and there was a provision in that law that says that capital gains tax as a result of capital gains tax was waived for angel investors on any dividends. That's huge, right? So we're seeing countries rising up to the occasion. Rwanda enacted there's a Kigali International Financial Center. They're opening up their countries, offering tax incentives. Nairobi, Kenya was a recent one. Recently in November 2023, they released the investment facilitation framework or something intended to sort of bring in foreign direct investments. So this is not the time to hold back. Yes, the landscape is challenging, macroeconomic factors, yes, but the governments, the angel investing groups on the continent are also doing their best to canvass arguments, right? To, help the regulatory landscape. And so it will continue growing. According to the World Bank, over the last 3 years, we've seen an increase in remittances grow by 12% combined annual growth rates. And so it will continue to get bigger, but let's channel it into private investments and early stage businesses.
Jemima, I'm smiling at you
Yes.
because I know you have some thoughts on this, like me. So I'm going to defer to you. You can pass me the ball.
I think first and foremost, we don't realize how urgent this is. Like, I think for me, there's an urgency in all of this because by 2050, a quarter of the world's population is going to be African. And now think about where our countries are, right? You think about, let's not even use Nigeria because everyone knows Nigeria is all the way at the end of the stick. You use a country like Ghana, you look at what's happening with the exchange rates, you look at how the ease of doing business. We need to really rise up to fill that white space. If not, we don't know what the future of our continent is going to look like. And we're going to leave it to outsiders and people who don't have a long-term vested interest to come in, provide capital, make money, take it out. And once the money gets taken out, guys, we're not creating that cycle that allows for rinse and repeat and for us to really build the wealth that we know that the economy can build. So that's one. I think two, we've started having the conversation about who the continent belongs to. And I love it because as far as I'm concerned, I think it belongs to everyone. If you want to be a part of the continent, please take your 2 legs there in December, go enjoy, do Dirty December, but don't just do Dirty December. Find companies that you can invest in, that you can mentor, that you can sponsor, encourage your friends and families to also do that. Because at the end of the day, I think for me, it's just the sheer urgency with the rise in population. Where are these people going to school? What are they going to eat? What healthcare facility actually has the potential to be able to take on the increased number of patients that we're expecting? And meanwhile, I was saying to someone earlier on that I do think that the secret sauce of the continent is our startup ecosystem. We have businesses that are innovating despite a lack of fundamentals, despite a lack of foundations. If we're able to find them and capitalize them to a point where they can grow, this is how we move the continent forward. So yeah, those are my thoughts. Sorry, especially passionate about that. But yeah, thank you so much.
Yeah, I would agree. And the only thing that I would add is that in addition to startups, right, really the backbone of the continent and the diaspora are small businesses, right? SMEs, maybe not tech enabled, right? But have an opportunity and the ability to scale to achieve venture-like returns, right? So how do we galvanize all of these owners and small medium-sized businesses to make it easier for them to do business, right? Make it easier for them to also scale, right? Maybe they're not building decks, they're building, they're quite literally building their communities, right? How do we find a way to kind of merge the two so that it really works for us? And I think that could be a model for the world, right? The US is trying to figure this out as well, right? Main Street anywhere in the world is the backbone of that society, right? And so how do we enable both in parallel? And just a quick note on the diaspora, another thing to that end, I think that when we think about the diaspora, it's not just, so it's Africans all over the world, people of African descent all over the world, we talk about remittances. There's a lot of wealth on the continent, right? That we also need to galvanize to reinvest on the continent. And I'm not saying that's not happening. I'm not saying that's not happening, because it is. But I think there's an opportunity to diversify the way in which that's happening, right? And a lot of folks on the continent also angel invest on the continent. But I think oftentimes there's a tendency, to think about investing in the US and in other countries, whereas we're literally sitting on gold, quite literally. We are creating gold, we're sitting on gold, we're mining gold. So that's also part of the conversation that we're having, and I'd love to continue.
So I'm going to thank all the panelists for their thoughts, and I want to make sure that we open it up to questions. Please go ahead.
Hi, my name is Lucy Matsiko, and I'm involved in the Africa ecosystem. And thank you so much for your VC 101 or VC crash course. I just wanted to have a contribution. I'm also the executive director of the Africa Future Summit, and I've been involved in curating panels as well. And I'm glad that we're having these conversations on how to source capital and funding for Africa, because many a time people think they'll go after BFIs like going to African Bank, and they're not yet ready for that type of thing, and they don't qualify for that, and it appears to be like a phantom fund. But I believe one of the critical things with regards to Africa has been open for business. Africa, things have been happening on the continent, but our stories are not told enough on mainstream media, like the Forbes or Fortune or others, right? Whenever we hear about Africa, we most of the time hear the problems, but not the opportunities. And don't get me wrong, we have seen situations where you invest, and that's a bad deal. That's why you have to do your due diligence, and that's why it's important to partner with diasporas, also people who have lived on the continent, because they're able to connect the dots. Because like I was an international student, but I also went to school on the continent, so I still have. I'm half Ugandan, half South African, married a Ghanaian, and so I still have connections on the continent, and I'm in touch with teams on the continent. So it comes down to also education, sensitizing people, both even on the government's point of view, as well as the founders and the investors. And one of the things I believe, until a lion begins to tell a story, you glorify the story of a hunter. And one of the things that happened with COVID-19 was we're able to see African stories told regarding investors. Because think about it, we have black tax. People have been doing good on the continent. People have been remitting funds onto the continent. I'll tie this onto why I say we have to structure our ecosystem and solidify it and strengthen it, because how do we connect the dots so that we don't operate in silos and we don't have the constant same conversations over and over again without identifying how to utilize that funding? Because you have funding that comes from the continent into the US. And how do we structure that funding from here back into the continent? And some people might be doing angel investing, but they don't know what angel investing is. And another challenge that I've also noticed, some of the people who deserve to be in the rooms are not in the rooms. They can't afford to be in the rooms. They can't afford to go to some of these, say, summits, or they don't know that they're happening, and yet they're very talented. So those are the conversations of how do we also bridge that gap. Like for instance, you have Forbes 30 Under 30 happening in Botswana in May. And founders go to those events, meet people, and meeting, and then investors also meeting their ecosystem, creating an ecosystem of diasporas who can also guide them on where to invest. And because most times we find people investing in the top four in Africa, the big four, Nigeria, South Africa, Ghana, I'm sorry, it's Egypt and Kenya. And forgetting the others, you don't realize that Angola has a role. I mean, so maybe I've been out of Angola for a long time, but how do we start to know about this information? And how do we make it a sweet spot for investors?
Any?
Oh, I think the underlying theme there is.
Yeah.
But also, we want to come up with solutions.
Yeah, I mean, one of the things that
Well,
I meant.
I did want to touch on, I mean, thank you, Boosie. You covered so much. And I feel like all of those things, like, yes, 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 and yes. And that's the thing, there's so much that needs to be done and so much that, so much opportunity, right? But I think one thing that you touched on, the note around African narratives, right? And the importance of advancing not just more African stories and Africans telling their stories, but a variety of stories, right? And
And not just Nigerian stories.
yes, but you know, there are filmmakers, there are creators, there are people telling stories, and thankfully social media is showing that. But also just sharing, you know, all types of stories, our humanity, every element of our humanity, right? And that's one of the reasons why culture is one of our investment themes and media is a sub theme. I think there are a lot of opportunities there. And there's something that you actually mentioned in a different panel that I do want to share with our audience and with the folks tuning in, because you talked about, because you could easily be on this panel, Boosie, but you talked about soft power, right? And the opportunity that we have to really galvanize our soft power, not on the continent and as a diaspora. Is it my phone? Okay. Our opportunity to really galvanize our soft power to achieve everything that we've talked about today in terms of like financial capital, everything. Yeah, so that's something that I think I completely agree. And I think a lot of us are thinking about that and working on that. One thing I would mention, I think we've seen like Disney's Iwaju, Kugali Media. There's so many folks, that's just one example. There's so many folks that are working on that, and we want to be able to finance that. Because it's really hard as a storyteller to get financing. It's not profitable. It's not venture scalable. It's not going to produce a 10x return, but it's going to produce a lot of impact and returns in other ways, including financial, if we get it right.
I do want to make sure that we have time to network and speak after, so we'll take one more question.
Hi, my name is Iris from Ethiopia originally, and my question is, one wants to start an angel fund. What do you think is the minimum requirement for Africa in general from your experience? And for other funds such as venture capital, do you know of any LPs that would take the risk in Africa for general purposes?
If one wanted to start an angel fund, what would be the minimum? I mean, in my experience, I've seen some folks have like a minimum of 20K from like LPs for like fund one. I've also seen a lot of people start as syndicates, which can be a lot more flexible. And their minimum is like 5K. But really interesting, and I think Chi mentioned this, that during the pandemic, when Future Africa started, they started up as a collective where you could invest on a deal by deal basis. And there, the minimum check size was 2.5. And then that way they were basically able to like crowd, a fund for every single investment, and whatever was like missing, the GP would like cover the additional. But yeah, under my experience, this is something we just not interested
I did say one more question, so I appreciate you all coming out.
Is there a question on the Zoom? Or do we have time? We don't have time.
We don't have any questions on the Zoom.
Oh.
They're supposed to be populated here.
I'm a media person.
Please go ahead. Oh.
Hi, everybody. My name is Shamika Obialo. Thank you, Chief, for inviting me. Thank you to Rossi for anchoring this. I have a question that kind of goes to the fundamentals of what we're talking about here. And once upon a time, I was running an angel investing community and pitched a number of high net worth individuals to join and invest. And it is a lot of work trying to get anyone to write an angel check. but specifically talking about the continent, the number one question we're gonna ask is, what's my exit opportunities? We touched on the ROI, but we didn't really dig into it, and this is a question that I really would like a market, understanding of. Obviously, there are liquidity challenges for every startup in this country, in Europe, but on the continent, it's uniquely challenging. And so I wanted to get a sense of what you guys are seeing, not only when it comes to that final exit, but those opportunities for follow-on investment, because you can, as an angel, get in without having partners to continue to invest in that ultimate opportunity to exit. And so I wanted to get you guys' thoughts on that, and truly, it's something that has hindered a lot of people in writing that check.
Such a great question.
Well, going back to an earlier comment I made, your sweet spot as an angel investor is when you can see that your dollar is going to do something that's going to attract other capital. And so that's, but as a founder, your sweet spot is whenever you can get the money, right? And so I think that one of the things that we've got to think about is how we assist, and there's roles for some other, from incubators to others. This is also the role of, as an angel, can I roll up my sleeve? If I don't have this angel investment right here to where I put money in, and it's a short road to turn into an institutional investment or possible institutional investment, do I have the skill set, or do the group I'm surrounded with or I'm bringing in have the skill set to help accelerate it to that point? The next thing I'm going to say is invest in a crowd. I think that's been what we've been saying, but it comes, just make that explicit, invest in a crowd. You need to get a few people that are somewhat different from you and have, some strengths and weaknesses that give you a broader coverage, that are willing to invest with you and kind of ride with each other. That'll help you with both the due diligence. I'll also help you with the rolling up your sleeves. And it's something we can do. I don't have the answer yet, but I think that there's got to be an answer with technology, and how we can, from telling the stories to connecting each other better. I mean, and part of that, I say that because I'm not really a social media person, those of you who know me, but it seems to me that this is a role for social media amongst anything, because it's a grouping, it's gathering up groups, and we need to do that better. And once you gather up groups to disseminate information, to your point about the challenges and just until forming your angel network, I think they work better often when there's already something organically that's drawing these people together. So you'll see alumni networks, so you'll see a group of college friends, and then from that they go to their own where they can go out like that. But I think you gotta get a core group of people that are already like somewhat attached, and then have them build around. If you're actually trying to build out an actual network or any type of conglomerate, it's really hard to go out, and because then you're almost acting like a GP if you're trying to find people who are a little bit more removed and get them to come together. And that's that point in time, I don't know. I think I want to go ahead and create the actual fund, if I can do that.
If I may, I want to make sure I answer sort of like the root of your question, right? Around the fundamentals, and also like how do you get to like the exit question, right? Because we think about the fundamentals of investing, right? At a baseline, it's you buy low, you grow the company, you sell high, right? You sell for more than when you invested, right? And so the good news about being an angel investor is that you don't have to wait until an IPO or an acquisition to generate a return, right? You just need to get to that next kind of that priced round, to that next milestone, right? Or to ideally that priced round, because you're investing at the very earliest stage. After the pre-seed is the seed, Series A, B, and onward. Typically, especially at the Series A, sometimes at the seed stage, there's an opportunity to kind of exit your return if there are new investors coming on board. You just have to have a good relationship with the founders to let them know, like, hey, I kind of want to, get back some of my my money, right? And so a lot of angel investors, you'll see them at least get back their principal, the amount that they put in, and then leave the rest to kind of generate more upside. And so that's a good thing. You don't have to wait until an IPO and to an exit to generate some form of return. But a lot of people wait because they want to see that big multiple. They want to see the 2, 3, 4, 5x. So there are those types of exit opportunities as an angel.
I think the only thing that I'll add is obviously our public markets are not as mature as they are here in the US, right? So IPOs might not be what you might have for the next couple of years. Hopefully, you know, sooner rather than later, our markets get there. But I think I've definitely seen a lot of M&A activity on the continent, like a lot of consolidations, especially like in fintech, where, you know, we saw what happened to Carbon, we saw Max and Wasoko merge, and that way people are able to get their money out like through M&A. I think another strategy that I've seen that I think is personally big genius, but one of my really good friends, big sisters, Maya Famadu, Aggressive Capital goes in early. They can be like best check in, and they have like a valuation that they target. Once they hit that valuation, they sell off, and that's how like they exit. And I think that just obviously like, you know, requires some level of discipline, because what if this company goes to $1 billion, then, you know, you missed whatever that upside was there. But like she said, whenever there's a new funding round, there's an opportunity for you to get your money out if you have a good relationship with the founders. And lastly, just want to make a point on what you said about, you know, folks thinking about this exit issue, like how do we make sure we get our money out? I would say that something that I found to be very interesting, especially since the year of the return in Ghana, right, is we have people going back to the continent, people spending December there. Like if you're ever looking for Chance the Rapper in December, he's in Accra. And he's having the time of his life, right? Like we know we have Any Leisure like talking about Invest in Africa. We have Jay-Z talking about Invest in Africa. We have like TD Jakes talking about Invest in Africa. There's a lot of interest with regards to like committing capital and like on the ground. And I think when that interest feels a bit more personal, people are asking less logistical questions like exit, you know, because like it's a bit more ingrained than just financial, which maybe ties back to our doing good, you know, as part of like investing as well. But, you know, just wanted to highlight that as a trend that I'm seeing as well. There's a lot of international focus and like high net worth focus now on investing in the continent, and since people have actually started going back home like at least once a year.
So really quickly, one thing I'm also seeing too, which is really cool, is that because there are a lot of secondary market companies sprouting up, like a lot of startups that are like providing a secondary market for private investors. And I'm seeing like, I get emails all the time for some of my investments, like US-based secondary market companies that want to buy African shares, right? So that's a trend I'm seeing growing, and that's happening. So that's another, you know. So
there's three things in VC period. There's a secondary market, get you out. There's M&A, and there's because even I would consider like if they let you exit and they buy it back, that's a pseudo secondary. And then there's IPO. The one thing that is a new trend you have a lot of African companies that are now putting in US holdcos. So they may get to a certain level, and then they'll basically move their equity up to a US holdco, Delaware. The reason why they do that is because the overwhelming majority of the money that's going into the VC market still remains coming out of the US. A number of US-based VCs, while they may invest in Africa, they have a restriction that says they have to invest in a Delaware company. The reason why they do it, not to bore you, is because they actually know what they're doing when they invest in a Delaware company. They have a number of things they want to see in their shareholders agreement. It's tried and true, it's vetted. So what they would say is there's less transaction friction. They know what they want to see. They can focus on the important things. It's easy for them to do a deal. They don't care how you figure out as a company. Well, they do care, but leave it to you to figure out how to repatriate those dollars from the US to your African operating co. But they want to come in Delaware. With that trend happening, we've seen a lot more of that in the last couple of years, 2-3 years. There will be a lot more African IPOs because that gives them direct access now, in my opinion, predicting to a different market exit, right? Now that puts that on the table. They'll still have to have the investor education because it's a different market. And so people will want to understand why they're investing in this IPO of a company that traditionally has most of its business in Africa. but there's a variety of reasons why that can be dealt with in a different way, including going to the bond market first if you get to a certain size, which is sort of like IPO light. And then once you work the bond market, those group of investors will know you a little bit better. And then there's a bigger track record in public markets. And but that's the thesis around that. So the IPO market, come back to me in 5 years and tell me if I'm right. But that's going to be a big round.
So thank you all for coming. We are still going to hang out a little bit later so that you can ask any questions. I want to say a special thank you to the panelists. Appreciate your thoughts and ideas. We do have a few announcements. They've been coming up on the screens, but please check our venturecrush.com website for upcoming Venture Crush events, which include Venture Crush Africa, Venture Crush Founders Group, and our other Venture Crush events. We'd love to see you there. And yeah, appreciate you guys coming out.
Thank you all. Thank you.